All right. Well, we're right on time here. There's my little ding to officially tell us it is time to begin. So, good morning, everyone, or good afternoon, I guess, depending on where you are. I know we've got folks really tuning in from all over. So, we're going to go ahead and get started. We appreciate you being here with us. Today, my name is Jamie Terrell. I lead marketing and communications here at Saltmarsh. We appreciate you joining us for today's webinar on single audit requirements for the healthcare industry. While this may be a relatively new issue for some on the line today, we have Allison Jones and Philip Boer here with us, both senior managers in our firm's audit and assurance practice. We're happy to have them leading our presentation, and fortunate for us, they are no strangers to this subject. So I know they're both ready to jump right in. Before we get started, I have just a few quick housekeeping items to share. First, everyone on the line has been muted. If you do have questions throughout, please feel free to share them with us in the chat. If we have time toward the end, we'll address some of your questions together. If we do run out of time, know that someone from our team will follow up with you offline afterward. We'll also have contact information available in the slides. And of course, you're always welcome to contact any member of our healthcare team or audit team for additional guidance following today's presentation. Our presentation is being recorded. You'll receive a recap email from us tomorrow, along with a copy of the slides and any additional resources that we cover. And finally, if you've become a regular fan of our webinars, we would love to know. In the follow-up email you'll receive with our materials, you'll see a link to complete a short survey. Like many of you, we're trying new things this year, so please take a moment to share your feedback with us and request any topics that you'd like to see us cover in future webinars. With that, I'm going to hand things over to Andrew Kent, shareholder in our healthcare consulting practice, to get us started. Andrew?
Thanks, Jamie, and good morning, everybody, and all our clients and friends out there have joined us today. It's just going to have a great presentation today and a great topic. Before Allison and Philip get started, we wanted to jump in and kind of bring our audience here up to speed on just a couple things that have been happening, because they do impact some of the discussion that's going to happen today, and they impact some issues that we know a lot of y'all are facing. And these are with regards to the revisions to the reporting requirements. Before we go, Allison, let's jump back and I'll just go over the agenda for today, if we can. Whoop, there we go. So today's agenda, as Jamie said, the main focus is going to be on the single audit reporting requirements. And so we're going to second and touch requirements. These are reporting requirements to HHS, so it's slightly different than the audit requirements. Allison and Philip are going to give you a good overview of the single audit process, because this is a process that's in place for lots of parties outside of not just healthcare, but we know a lot of our healthcare clients and friends are facing this for the first time this year. We're going to go over auditor responsibilities, your responsibilities as the entity being audited, and go through some common questions that you might have. So, Allison, if you go to the next slide. Whoop, there we go. All right. So real quick, before we get started on single audit topic, we did want to just touch base on some changes to the Provider Relief Fund use and reporting. A lot of y'all are here today because you've received provider relief funds this year through the CARES Act and HHS. And these funds, your acceptance and use of these funds is possibly going to trigger a single audit requirement for your organization this year. But on the overall use of how you can use the funds and reporting back to HHS on how those funds are used, there have been a lot of flux in the last couple months. So from the beginning, HHS has indicated that the provider relief funds can be used to reimburse healthcare related expenses and replace lost revenues associated with the coronavirus. During the attestation process, many of you will probably remember back in April having to provide lost revenue data for March and April. And at that time, HHS basically said, tell us what you think your lost revenues were. You can use any reasonable method. It could be a year-to-year comparison. It could be an actual to budget comparison. We didn't have a whole lot of guidance. And so everybody kind of went through that process, and we were rolling forward expecting something similar from a reporting standpoint. Allison, can you pop us over to the next slide? So The big surprise came back in September. So on September 19th, HHS published some new guidance that defined lost revenues not as lost revenue, but as the negative change in year-over-year net income from 2019 to 2020. And so this was a big shock. I mean, one, we're moving from a concept of lost revenue, which was gross healthcare related revenues, to lost net income. The second was we were being locked into a year-over-year comparison, 2019 and 2020. So it was a major shift in policy. HHS at the time was stating that its goal was to prevent windfalls to providers. They didn't want any provider to basically be more profitable in 2020 than they were in 2019 because of the provider relief funds. But the industry feedback was immediate. You guys made yourselves heard through your state and local organizations. And on October 22nd, HHS issued revised guidance, which has been subsequently amended again on November 2nd, that basically reversed the September 19th guidance and redefined lost revenues to mean the amount of the difference between 2019 and 2020 actual patient care revenue. And so that's the big thing. We just know there's been a lot of flux. We know this is going to be very important for for the provider community as you're looking and trying to determine, do you meet some of these triggers for the single audit requirement? Well, this change is going to impact very potentially on, how you use the funds, how you're able to document your use of the funds, what your reporting requirements are going to be, and then it just will have a big impact on how you're going to plan going forward. And what I was going to say is eventually possible recoupment from HHS. So Allison, I think we have one more slide before we get y'all going. So once again, just kind of going over what these changes mean. These definitions are going to drive many decisions on reporting, audit requirements, and possibly recoupment. We recommend that everybody be watching. HHS has promised additional frequently asked questions. They have not been published yet. They have stated that they're going to have some webinars on this issue, but they have not scheduled those yet. We're going to be looking at this issue in greater depth on September 10th, or December 10th. We have a webinar scheduled for December 10th. We'd invite everybody to attend if you'd like. And then remember that the portal opens for reporting ostensibly on January 15th, with the calendar year 2020 reports being due no later than February 15th. So this is something with the holidays that's going to be on us really, really quickly. So just want to kind of bring everybody up to speed on those major changes and some of those variations. Lots to deconstruct there. We're not going to get into any more today. Just want to make sure everybody's aware of it. We'll be speaking some more on later on in December. We'll be happy to answer any questions you may have, but just want to make sure folks were aware of that. And with that, we've got really a great topic today. Excited to introduce you guys. I know some of you have met Allison in some of our HHS webinars, but really I'm going to turn you over to Allison and Philip, and they have got a great presentation lined out for you guys. So thanks, Allison. Back to you.
Thanks, Andrew. Good morning, everyone. Thank you for joining us. We are certainly happy to have you here and hope that our time today is going to be informative, and hopefully you come out on the other side of it with more answers than you had coming in. All right, so here we go with single audit. This is a type of audit that's going to be a brand new experience for some of you, especially if you're in the for-profit commercial enterprise that has not received much, if any, federal funds in the past. I know we also have some nonprofits on the call that already undergo a single audit, so some of this may sound familiar to you. But some of the new programs that have been added recently have really added some spice to the mix, introducing some new concepts and some new situations into single audit that just have really never been there before. It's estimated that the provider relief funds alone are creating a need for thousands more entities, thousands, to undergo single audits, and that's not even considering any other federal programs that received some CARES Act funds. So we know you have a lot of questions. We will say that we can't answer all of them, at least not yet. As you know, the CARES Act funding was pushed through without a lot of guidance. Regulations and compliance requirements are still being written, as Andrew was talking about. Agencies thus far have been responding with a lot of published FAQs, and things continue to change almost daily from HHS and Treasury and all the other agencies that have given out CARES funds. We had really hoped that by the time we had this webinar that the Office of Management and Budget's Compliance Supplement Addendum, which tells us auditors what to test under each federal program, we'd hope that that would be out by now. So we could really dig in a bit more into the detail on what the single audit would entail. That addendum is expected to be published literally any day now. I just went and checked the website to see if there was any news. So we very well may have a part 2 to this webinar once we get our hands on that addendum and the guidance. So let's jump in. Philip is going to kick us off with some background and just a little bit of single audit overview. Okay, Philip.
Alrighty, thank you, Allison. Thank you, Andrew, and obviously thank you to everybody joining us this morning. Andrew had already mentioned it, and Allison as well. A lot of you guys are probably not familiar with the single audit, so I just want to go back in history a little bit and kind of talk about how we got to where we are today, how this whole concept of a single audit was established. And it really originated from the Single Audit Act of 1984. So that's when it was all created. Prior to that date, the various different federal agencies that are passing out federal funds, they all kind of had their own processes, their own reporting requirements, their own audit requirements. So as you can imagine, there were a lot of different guidelines out there. At one point, there were over 100 different audit requirements, audit guidelines out there, which obviously made it very inefficient, time-consuming, cost-ineffective, and at times confusing, because some federal agencies, even within their own departments, would have different audit requirements and guidelines. So with the Single Audit Act of 1984, they really try to put all those different requirements under one umbrella. So you can see that the name single audit is actually very fitting here, because they created one process, one audit process, a single audit process, to really include all those various different agencies, their guidelines, and so on under one umbrella. Now, the Single Audit Act, obviously, with every law, has been amended over time. One of the most significant amendments happened in 1996, when nonprofit organizations and education institutions were added to the single audit. Again, the intent of the whole act was really to provide a cost-effective audit of federal funds. Again, with those various different guidelines out there, it was very cost ineffective. A lot of federal agencies had their audit requirements done on a grant-by-grant basis, so there really wasn't any consistency there, and it wasn't just difficult for the agencies to follow, but obviously for the recipients to follow as well, because they would have to be familiar with all those different requirements and reporting standards and so on. One thing to also mention here is that the Single Audit Act of 1984, that's a federal act. So that relates and applies to federal funding, federal agencies. A lot of states implemented and adopted their own Single Audit Act. I know here in Florida, we have a Florida State Single Audit Act that really looks very similar to the federal Single Audit Act. It resembles a lot of the different sections and parts of that federal Single Audit Act, and it really is similar. Now, there are some small differences, but they really are just technical differences. They really do resemble the federal act. The significance of the state single audit acts are that you as the recipient will be required, and you have to determine whether or not you fall into either one of the two buckets of whether you have to do a federal single audit and a state single audit. So your funding sources have to be looked at separately. You might be receiving funds from federal agencies as well as state agencies. So they have to be assessed and determined separately. However, with that being said, there can be instances where the funding source originates at the federal level, but they do get passed through the state. So it's going to be very important for you to really get a clear understanding of where the funds are coming from. Where do they originate? Again, just because you might get funds from a state agency does not necessarily mean that that's where the funds originate. They could be coming from a federal agency passed through that state agency to you as the recipient. So if we want to look at the applicability and who the single audit applies to, there is a threshold of $750,000 that has been established. So if you and your entity expends more than $750,000 of federal awards in a specific fiscal year, you will be required to undergo a single audit. Now, this threshold of $750,000 has been increased over the years. Back in 1984, when that first act was passed, that threshold was actually $25,000. And you can imagine that obviously with the increased spending of the government and the increased federal programs, those amounts have increased over the years. There was one increase to $300,000 and another increase to $500,000, and then we finally landed at the $750,000 threshold about 5 years ago when the uniform guidance was passed. One thing to remember here is that when you determine whether or not you're meeting that $750,000 threshold, you have to look at expenditures incurred during your fiscal year. So if you're on a calendar year basis, that would be the period that you would be evaluating. If you're on a mid-year fiscal year, then that would be the fiscal period you would be evaluating for that $750,000. You often see with grant agreements or funding agreements from the federal government that they might be on a separate period. Oftentimes you see the federal government's fiscal year as the contract period. That is for the determination of the $750,000 threshold really irrelevant what the government's period is or what your grant contract agreement is based on. So again, you have to look at your entity's fiscal year and how much in federal awards did you expend during that specific period. Also, expenditures do not only include any grant funds, any cash that you might receive from the federal government, but it also includes loans, food commodities, or even donated surplus property. So it's going to be really important for you to know exactly what are the different funding buckets, the different funding items that you receive from the federal government, so you can make that appropriate determination of whether or not you do meet that $750,000 threshold. And then lastly, Allison already touched on that. Historically, for-profit entities were not subject to single audit. Initially, it only included state and local governments, and then the amendments of 1996 also pulled the nonprofits and institutions of higher education into the single audit requirement. But as Allison and Andrew mentioned, the HHS regulation also pulled the for-profit recipients of the provider relief funds into the audit, the single audit requirement. So that, again, that is the news of the year, I guess, for all those for-profit providers, that with this HHS regulation, you could potentially be now subject to a single audit if you meet the $750,000 threshold.
Hey, Philip, real quick, I just wanted to point out for the audience too, one thing to keep in mind here is that your trigger and reporting window for the single audit requirement could very well be different than the reporting requirements to HHS, where you're having to document the use of the funds, because the HHS reporting is on a calendar year for 2020, and then the first 6 months of 2021, but your fiscal years are going to drive. So you're going to be looking at your use of funds over perhaps multiple periods.
Yes, absolutely. Thank you for adding that, Andrew. And we'll look here in a second at what your reporting requirements are under the single audit and when those might be due. So that's gonna be a little later in the presentation. So we now want to take a look at the auditing standards and what standards we as the auditor have to follow within the single audit. There really are 3 different layers. And if you've been audited before, if you've either had a financial statement audit and or a single audit done, then these probably look familiar to you. For those of you who have not undergone an audit before, again, there are going to be 3 different layers of standards that we have to follow in a single audit. The first layer are the generally accepted auditing standards that are issued by the AICPA, and those apply to the financial statement audit. And then in addition to that, because you do receive federal funds, there are the generally accepted government auditing standards, which are issued by the Comptroller General, and we typically refer to those as the Yellow Book standards. And then the final layer of standards that we have to follow are the Uniform Guidance Standards. Those were the ones that kind of combined a lot of the circulars that were issued over the years into one document. They became effective back in 2014, 2015, 2016, that time frame. And these guidelines, these standards relate specifically to the federal programs and the compliance requirements with those programs. So what's the scope of a single audit? The single audit really is a two-part process, a two-part deliverable final product. The first section of it is the audit of the entity's financial statements. And a little further down the presentation, we'll talk about what that really looks like and what reports will be issued with that audit. In addition to the audit of the financial statements, we as the auditor also have to gain an understanding and test the internal controls over compliance with respect to the federal awards, the federal funds that you as the recipient received from the federal government. And then lastly, it also includes the testing of compliance requirements with those specific federal awards, making sure that the funds are spent in accordance with the program. And Allison is going to go into a little more detail as it relates to all those various different compliance requirements. So, Allison?
Thanks. Before I get into that, I'm going to touch on a little bit of the different funding sources that are now out there related to COVID-19. This here is a listing of some, not all the programs that have been impacted by CARES Act funding. Some are brand new. Some have been around for a while, and they're now being modified to include those additional funding sources. The numbers that you see here, those prefixes there to each program description, that is the number that's been assigned to the program in the catalog of federal domestic assistance. We call that the CFDA number. And the catalog is basically a giant listing that describes all the programs that are out there funded by the federal government. So typically, if a program has a CFDA number, that's usually a dead giveaway that it should be considered for single audit. So what's unusual about some of these programs is that they have been assigned a CFDA number, but the regulations have been written to specifically exclude them from the scope of the single audit. Most notably are the PPP loans, but there are a few smaller programs that fall into that bucket too. The program that's getting the most attention when it comes to single audit is definitely the Provider Relief Fund. Many of you are very, very familiar with those funds. Within the Provider Relief Fund, for purposes of the single audit, both the general and the targeted distributions are included in there, and also the SNF infection control relief funds that folks have been starting to get to. That is also the program that is bringing the for-profit businesses to the audit party, as we've been talking about. So now if you're a for-profit, your audit is going to look a little different than it will for nonprofits. And we're going to take a minute to talk about that. All right, so for commercial entities, the regulations say this: if you receive and expend $750,000 or more in federal funds in your fiscal year, you actually have two options. The first is that you can have a financial audit done under government auditing standards, and that would be a program-specific audit or a full-blown real deal single audit. So what's the difference? Option one is going to be the program-specific audit. This one focuses on testing internal controls and testing compliance purely around the federal award itself. The entity's financial statements, the balance sheet, the P&L, all that are left out of the audit completely. This is very likely going to be the path you choose if you don't otherwise have a need for a financial statement audit for any other purpose. Option two is the full deal. It, of course, tests the federal awards, tests the compliance, tests internal controls, but it also includes a complete financial statement audit done in accordance with the more stringent government auditing standards. So if you're already doing a financial statement audit, there will be some additional documentation and testing since the more stringent layer of auditing standards will be applied. Your auditors will be asking about and testing more stuff than usual around internal control and compliance, not only as it relates to the federal funding, but also as it relates to other laws and rules and regs and contracts and grant agreements and the like. So in addition to the amped up financial statement audit under option 2, the test of internal controls and compliance for the major federal programs get tacked on as well. A note of caution at this point, I guess. At this time, for-profit entities do not have to submit a data collection form to the Federal Audit Clearinghouse. This is important since all information in that form and in the accompanying reporting package becomes public information once it's submitted. Most private entities that I know do not want their financial statements and their other information available to the public, which is why the regulators have provided for an out essentially here. It's been noted that there is a possibility that could change and that some, maybe not all, of the information about the audit, at least as it relates to the federal program, could be made public, but we won't know that until the compliance supplement comes out, hopefully any day now. So what is this compliance supplement thing that we've been talking about? It is basically the Cliff Notes to auditing any given federal program. It's issued by the OMB. Without it, you as the auditees would have to go out and really research the heck out of each program for requirements that you would need to comply with. It helps auditees by explaining the compliance requirements and the programs and the ins and the outs, and then also helps the auditors by describing what it is we really should be focusing our testing on. The most recent version of the supplement came out in August, and surprise, surprise, it did not include any of the COVID funding that had been related to new programs or changes to existing programs. The OMB said, okay, well, that info's coming. We're going to put out an addendum. It's going to come in the fall. It was very vague on the date. So that's where we are today. We're kind of sitting and waiting on that addendum to see what those requirements are going to look like. All right. So a big part of a single audit or a program-specific audit is going to be a focus on internal controls over compliance. One of the benefits of the supplement is that it has a lot of information in there about internal controls and what controls should be in place around federal awards. It has some background and some examples of what good controls might look like. I would suggest, in your free time, to go ahead and review that information if you haven't seen it already, and see what holes in controls you may have out there that may need to be plugged up now. The next slide that we have actually has a link to the supplement. You'll be able to use that link once you get the program materials sent to you. Now, the uniform, that's what UG stands for here. Uniform guidance also chimes in about internal controls and the best practices that are out there to follow with the frameworks that are listed here. All right, you've heard us refer to compliance requirements several times already here, right? So these are the listed standard compliance requirements that may or may not be applicable to any given federal program. It really depends on the objectives, the provisions of the program as to which of these actually come into play. Very rarely, if ever, do all of them apply. The compliance supplement will describe which of these are considered to be direct and material to whatever federal program we're looking at for testing. The supplement has a lot of explanatory info on what each of these entail. So the link at the top here, as I mentioned, should take you right to those descriptions. It's really, really good information to review to get a firm grasp on what the awarding agency believes to be important and to give you some insight as to what your auditor is going to be looking at. All right, so I'm going to kick it back to Philip to talk a little bit about auditor responsibilities and auditee responsibilities for the single audit.
All righty, thank you, Allison. Yeah, so let's start with the responsibilities of the auditor, our responsibilities. And you can see, again, we already kind of touched on what the single audit includes. It's an audit of the financial statements, and it's an audit of the compliance requirements as it relates to your federal awards. So our first responsibility, the audit of the financial statements, again, will be performed in accordance with generally accepted auditing standards and government auditing standards, that additional layer of auditing standards. And when you look at the auditing standards at the auditor's report that we would issue, you can see very clearly there's a paragraph in that report that talks about our responsibility as it relates to those financial statements. Again, auditing them in accordance with generally accepted auditing standards and the government auditing standards. In addition to the audit of the financial statement, we're also responsible for gaining an understanding of the internal control over federal programs. So again, that's the section that is specific to the funding that you receive from the federal agency. What internal controls have you established? We would review those. If we would note any deficiencies in internal controls, those would be communicated to management. It would not be our responsibility to determine whether or not they're operating effectively. But if we found any deficiencies during our review, we would document those and communicate those to management. So in addition to that, we are also responsible to determine the major federal programs that need to be audited. Now, if you only have one major program, or one federal program, I should say, that determination obviously is very simple and very easy. One program that would need to be audited. If you, again, meet the $750,000 threshold. If you receive funds from various different federal agencies under different CFDA numbers, obviously there's going to be a process involved in determining which ones of those federal programs need to be audited. And that is our responsibility to determine that we meet certain thresholds, certain percentages, and so on to make sure that we have the appropriate coverage that's required. So once we determine what the federal programs are that need to be audited, we're going to perform the compliance testing of those programs. Again, it's only going to relate to your major federal programs that we determine to need to be audited. It's not going to be every single program that you receive funding for. It's just going to be the major ones that we've identified. Again, Allison mentioned there's a compliance requirement and compliance supplement out there. So we would look at those, determine which ones are applicable, what is the impact of those requirements on that specific federal program. We would design our audit procedures based on that, and then test whether or not the expenditures that you incurred under that program are compliant with those requirements. In addition to that, if you had any prior audit findings, and obviously you would only have prior audit findings if you had a prior audit done, we would have to follow up on those. We would have to determine whether or not they still exist. Was management's action plan to address those findings? Was it successful? What is the current status of those findings? After that, we would report on any new findings that we would come across during the audit. And those would be communicated, and those would be documented in a report. And those findings would result from the tests of compliance as well as internal controls over the compliance requirements. Again, if we find those instances, they will be communicated to management. Management will have an opportunity to respond to those and include those in the report. And then finally, our responsibility is to complete and sign the auditor section of the data collection form. Now, again, as Allison had already mentioned, most of you might not be required to file this data collection form. For those nonprofit entities that are on this webinar, I'm sure that, and you've done a single audit before, You probably recognize the data collection form. It is an electronic form on the Federal Audit Clearinghouse website where you just enter the information about the federal awards that you received, the CFDA numbers, the amounts, whether or not there were any audit findings during the audit, and then that form would be certified first by you as the auditee and then by us as the auditor. And at that point, it then becomes public information and anybody can go to the Federal Audit Clearinghouse website and pull down really any data collection form that they wish. So if we now want to take a look at what is actually included in the single audit or uniform guidance reporting package. First, the type of auditors report. There are actually going to be three. The first one covers the financial statements and the schedule of expenditures of federal awards. So that report will include an opinion on whether or not your financial statements are presented fairly in accordance with US GAAP. That if you've already done a financial statement audit, then that report will look very similar and very familiar to you. In addition to that regular financial statement auditor's report, we would also issue a report on the internal control over financial reporting and on compliance and other matters based on an audit in accordance with government auditing standards. Again, this is what we call the Yellow Book standards or the Yellow Book report in this case. There are not going to be any opinions in there, but if we would find any deficiencies in internal control, we would document and report those in that specific report. And then the last report that's going to be part of the reporting package is the single audit report or the report on compliance and internal control over compliance for each one of the major federal programs. Again, the major programs are the ones that we determined that need to be audited. If you only have one, then that's going to be the one that's going to be audited. That report will include an opinion on whether or not you were compliant with those compliance requirements. It will not include an opinion on the internal control, but again, it will include any deficiencies that we identified during our audit procedures. In addition to the three different audit reports, we will also include the financial statements, your balance sheet, income statement, cash flow statement, as well as financial statements. It will include the SEFA or the schedule of expenditures of federal awards. And Allison's going to have a short little sample of what that might look like in a few slides. It will also include a schedule of finding and question cost. If you don't have any question cost, then obviously that would not be applicable. Include the summary of schedule of prior audit findings. Again, if you didn't have any prior audit findings, that would be non-applicable here. And then potentially a corrective action plan prepared by management. Again, if there are no findings, you would not be required to provide a corrective action plan.
Hey, Philip, when you're looking at the major programs, how does that play in with the $750,000 threshold? Or do you have, in other words, is that $750,000 threshold defined what is a major program, or could you have several programs that aggregate to more than $750,000? How does that work?
So good question. So the first assessment you have to make is you have to look at all of your federal awards and expenditures as one to see if you meet that $750,000 threshold. So you would put everything in one pot, determine whether or not you are above that $750,000 threshold and whether or not you have to do a single audit. Now, once you've met that requirement and you are above that $750,000 threshold, then you peel back the onion and you look at each individual program and funding source to determine which one of those would be considered a major program and subject then to the compliance testing.
Excellent.
So if we now
just a note to add here, Philip, as well. If you are a for-profit entity and are opting for the option of a program-specific audit, the pieces for the financial statement and notes and the related report on the financial statements will not be included in your reporting package.
Yes, correct. That would only be applicable if you get the full-blown single audit. So if we want to take a quick look at the auditee's responsibilities at your responsibilities during the single audit, and you can really split that into three different buckets: the pre-audit phase, the fieldwork phase, and then the wrap-up phase. So during the pre-audit phase, you really want to take a look at what are the compliance requirements for each one of those federal awards that you received, and what are my internal controls over those compliance requirements? Because you are required to establish, implement, document, and maintain those internal controls. So that is your responsibility. We can certainly help with identifying any holes and helping you identify potential ways of eliminating those, but you are ultimately responsible for establishing and maintaining those internal controls. You are also responsible for complying with the federal statutes. So again, it's going to be very important for you to identify those federal statutes, regulations, so you can identify the requirements that you have to follow to make sure that there are not going to be any issues really further down the road. You're also going to be responsible for maintaining adequate records to identify the federal funds. Now, that sometimes can get a little tricky because the documents you receive from the federal government might not always include all the necessary information. If that is the case, reach back out to your contact person, ask them for that information, the CFDA number, whatever might be missing, to make sure that you have all that information and you can make the appropriate assessments and decide what the requirements are that you have to follow. You obviously always have to safeguard personally identifiable information. You got to make sure that no third party can access those. And you will have to prepare the statement of expenditures of federal awards. Now, we can certainly, as the auditors, assist you in preparing that schedule. And we typically do that for our client, but it is ultimately your responsibility to prepare that. Again, we can assist in preparing it, but that schedule, that statement is your responsibility. Now, during the fieldwork phase, it really just comes down to assuring that we as the auditor have access to the various different records and personnel. We will determine our audit procedures. We will make selections of expenditures that we feel like are necessary to be tested, and then we will request documents to support those expenditures. Questions for certain persons. We need to document internal controls, obviously have to talk to individuals to determine what the process is, what the internal controls look like. But that is really the main responsibility during the fieldwork phase. And then during the wrap-up phase, it really comes down to taking prompt corrective actions if there were any identified issues, non-compliance, preparing a summary schedule of prior audit findings and the corrective action plan. Again, if you didn't have any prior audit findings or any current year findings, that would not be applicable. And then finally, it's the completion of the data collection form and submitting it to the Federal Audit Clearinghouse. Again, that is something that we typically assist our clients with, so you won't be alone with that. The due date for the data collection form, if you will be required to submit one of those, is going to be the earlier of 90 days after the receipt of your audit report or 9 months after the fiscal year end. So if you're on a calendar year end basis, the latest you will have to submit the data collection form will be September 30th. The earliest will be 30 days after the receipt of your audit report. And then finally, as Allison already mentioned, the data collection form is public information. So anybody can go to the Federal Audit Clearinghouse website and access that information and those forms that have been submitted.
Philip, I will say that there are a lot of entities with June 30 year ends that were subject to single audit for 2020 that are still hanging out there on a holding pattern right now, waiting on supplement addendum to be issued. We have heard that due to the delay in publishing that guidance, there is chatter out there that the single audit deadline for those June 30 year ends might be extended. It's currently March 31st, 2021. So the auditors don't have a lot of time to get done by March 31st when the guidance still isn't out there, and typically testing would already be done by now. So we're waiting on more information about that. All right, and I did want to speak a little bit about some action steps that you guys as auditees can be taking now. First and foremost, if you haven't already, and hopefully you have, start discussing the single audit or your program audit with your auditor. Make sure you're on the same page about approach. Go ahead and get your engagement letter in place. Talk about edits to fees, as necessary. Make sure you have a repository for all your award documentation, all your data. Make sure that that's all accessible and in a safe, common space. Review your information and your other resources. Make sure you really understand what it is you need to comply with. And we've listed out several of those resources here. Take a look at your existing internal control documentation and policies and procedures, as we've already mentioned. Which of those may need revision in light of all this new funding? Which of those may need revision due to recent changes in the workplace, like working? Many of your people may be changing roles and process and how things are done. And make sure you're keeping up with not only the transactional information that you're using to substantiate the use of all these funds, but also make sure you keep memos or some kind of other documentation on any judgment calls that you needed to make as you go through that process.
Okay. Allison, I'll point out that especially with the provider relief funds, this can be extremely challenging because, as many providers know, funds just were often wired into bank accounts with little or no warning or notice, little additional documentation. Most of the attestation has been online in the form of online portals. And so you may go back and find that your documentation of this is very, very thin. It probably is a good idea to go ahead and make sure you have a working file, at least in the form of a spreadsheet or a memo, a Word document that outlines when you received and the information, that you got when you received it and when you attested and all the, any confirmations saved as a PDF file somewhere, because you may find it, if you're having to go back and recreate something that happened in April of 2020 and, June of 2021, there's a lot of miles that will have, be behind you at that point. And so just keep that in mind.
Yeah, absolutely. Thank you, Andrew. All right. One of the most important things that you can be doing in advance of the audit is putting together the SEFA, the Schedule of Expenditures of Federal Awards. That's the schedule that serves as basically base camp for us auditors, since that's where we start looking when we're assessing risk and looking at which programs are going to be tested as major programs, as Philip was saying. Just to echo Andrew's comments, this is going to be a very, very challenging exercise this year due to the new concepts and situations that were born out of programs and that hurried process of pushing out the funding. A lot of the normal protocols were not necessarily followed in the very warranted interest of time. But before you put any expenditures into the totals that eventually end up showing up on your schedule, make sure that yes, the underlying expenses have indeed occurred. Make sure that an award has actually been made. If you receive the funding, if you have the cash in hand, that is a darn good indicator that yes, it's been made. Otherwise, some sort of agreement or written communications, emails, other items may likely be the source documentation that you would have to prove that an award had been made. And again, if there are any major judgments that needed to be made in the process, please do document those and the basis and rationale for any conclusions that you reached. I did want to give you just a little snippet here. I wanted to make sure to include an example of what the SEFA looks like for those of you that haven't had a single audit before and may be unfamiliar with what that schedule is, just to give a visual as to what we're talking about. It lists first the program description and then the CFDA number. That contract number is the contract number that the awarding agency has assigned to it. And then, of course, the expenditures that are attributed to that funding source during that time period. So note that all the programs, regardless of whether they individually meet that $750,000 threshold, all of them should be included on the schedule. So if you have, for example, $10 million in provider relief funds and then just, a measly little $50,000 in FEMA funds for some reason. The FEMA funds still need to be included on the schedule, even though in comparison they're very, very small and will not be tested as a major program. Also note, you can see the little red font I have there with the COVID-19 designation. COVID-related funding does need to be broken out from funding sources that are more regular, normal, recurring type of funding sources and designated with a prefix like you see here. All right, moving very quickly into our commonly asked questions. We have included several questions here, some of which have been based on inquiries that we've been receiving from clients, and others are from participants that are here today and submitted them in advance of the webinar. We weren't able to include all the questions received here, but we will be responding to each of you who submitted a question. So if you don't see yours here, don't despair. We'll get back to you. And if we don't have time for Q&A after we go through these today, please do let us know, submit them, and we will respond to you. So first off the bat, the question is for a facility that received both PPP and PRF, what would be the best way to report payroll in order to get the maximum benefit from both programs? Well, of course, first of all, you can't use the same payroll costs to claim funding under both programs. There is no double dipping. There was some ambiguity about that in the beginning, but that loop was pretty quickly closed, and it's now pretty clear you can't do any double dipping. The allowable costs under the Provider Relief Fund are going to be more broadly defined, and you do have a longer time period until June 30 to incur those allowable costs. By contrast, PPP costs are going to be more narrowly defined. The period of availability is going to be shorter. And while every situation is going to be unique, it's likely that you'll want to get the PPP forgiveness piece out of the way first and use whatever payroll you can for that before moving on to substantiating the PRF cost. Andrew, do you have anything you want to add to that? I know that's...
Yeah, Allison, I'll just say, there are a number of things in play here. And another thing to keep in mind is that in general, HHS seems to be taking the stance that all other funding sources are to be used first before reporting your use of the PRF funds. So to the extent that you received a PPP loan and received forgiveness on that loan, or to the extent that you received monies from, say, a state Medicaid program or other sources, HHS is taking the stance that those funds have to be used first. There's probably going to be some conflict between some of the state programs and HHS as well on the order and use of funds. And, the other thing to keep in mind, too, is that PPP is not subject to the single audit requirement. So that forgiveness is not necessarily going to be, subject to single audit requirement. And if you're using it first, that may play into whether or not you meet the threshold as far as your use of PRF funds in a given period. So there's a lot of moving parts in this analysis.
Right. Thank you. All right, our next question is whether the single audit needs to be done at the same time as the regular annual financial statement audit. It doesn't have to be, but it can be, and it's definitely more efficient to conduct them simultaneously, since some of the procedures can provide audit evidence for both the financial audit and the single audit. Do keep in mind that even if you don't do them at the same time and therefore don't include the SEFA with your audited financial statements, those financial statements do still have to be audited in accordance with government auditing standards, that additional layer. You can't just use kind of the regular standards you may have in the past. There are some report dating complexities that come into play when the two audits are separated. And then there are some additional subsequent events that, excuse me, where the window is expanded to include the later date of whenever the single audit is completed.
So Allison and Philip, we have a couple questions from the chat that I think it'd be appropriate for this time, and they're around is the single audit threshold, is it going to be calculated at the parent level? If you have an overall parent organization or a common TIN, or is it going to be calculated at the provider level? Because you may have groups or organizations that receive multiple PRFs at the provider level. They all roll up under a common TIN for purposes of HHS reporting. How does that impact the $750,000 threshold and the single audit requirement?
That is a very, very common question. We're actually getting onto that at number 4, I think.
Okay, excellent.
Very good. We'll get there. All right, next one. All right, my organization already receives a financial audit, but my auditor doesn't want to do the single audit. Can they be conducted by different auditors or at different times? Well, we already talked about the different times, and yes, that's a possible situation. Not going to be as efficient, but yes, you can. And along those same lines, you can have different auditors, different firms working on the financial audit versus the compliance audit. There are a number of situations, and when that might happen, it would likely be when your current auditor, for whatever reason, has chosen not to adhere to those more stringent firm level and individual level requirements that are necessary in order to be allowed to conduct single audits or government audits under our professional standards. All right, so here we go, Andrew. At what level is a single audit performed when there are multiple entities consolidated or are part of another reporting entity? All the federal expenditures for all the entities should generally be evaluated at the consolidated level. There are a few examples that we give here. So first example, you have to have a SNF that spent more than $750,000 and consolidates up into a nonprofit parent. If the SNF itself at that level already undergoes a financial audit on a standalone basis, then the single audit may be performed at that SNF facility level. However, if they don't already have their own financial statement audit done, the single audit will be looked at the total overall parent organization level. On the flip side of that, if we have, in example 2 here, several SNFs that consolidate into a nonprofit parent for audit purposes already, so they're audited at the consolidated level, and no individual facility expended more than the threshold, but at a consolidated level, yeah, they did when you add everything up. Again, the single audit is going to be conducted at the parent organization level. So in general, it will be at the consolidated level. If for some reason you already have standalone financial statement audits done at a lower level, then the single audit can be pushed down to that lower level. I have just a couple of minutes, and I have one more commonly asked question to go through. So we may not have much time for any other Q&A before we go. So I'll try to get through this really quick. Is there a limitation on the amount of general and admin or other rent expense that someone can report towards substantiating PRF funds? So according to HHS, PRF funds are to first be used to cover any actual increased healthcare expenses that have come about from COVID. And those may include some incremental G&A or rent cost. You may have training related to increased staffing. You may be changing up policies and procedures and processes to accommodate response, and that may be in G&A. You may have rent costs for extra facilities that you went out to rent to increase capacity, that kind of thing. So they may be included there. You are limited, as Andrew kind of touched on, if you're being reimbursed from other sources, if you're already being covered by PPP funds, you're applying for forgiveness with those costs. You are limited by the amounts that are coming from other places. You can use rent, you can use G&A to help substantiate the use of the allocated lost revenues piece of PRF. You can't claim costs in excess of the lost revenues that you can demonstrate. You can't have more costs than lost revenues in that case. And you are limited on the amount of executive level 2 salaries that you can claim from PRF funds. They are very specific in the FAQs that sure, you can still pay your people more than 197.3, but you just can't claim that excess against your PRF funds. And of course, lastly, you just want to be able to assert that any of the cost that you're using to help excuse me, substantiate the cost, that yes, those were incurred to help prepare for, respond to coronavirus, including maintaining that healthcare capacity, which is an important distinction since there are a lot of broad type of costs that can go into that categorization. So that was what we planned to go over today. We have some single audit resources also listed here. These are helpful to us as auditors. We think they'll be pretty helpful to you guys. These contain active links so that when you get the materials, you'll be able to go through those fairly quickly. We thank you for joining us today. We expect that you'll have a lot more questions come up as we get into this and start to digest it a little bit more. Feel free to shoot one of us an email or give us a call anytime. We're happy to chat and help however we can.
And
So Jamie,
Allison,
did you have a few words to wrap up?
yeah, and Jamie, just real quick, I'll note for any listeners that we did have a few questions in the chat. We'll follow up with folks on an individual basis and also provide a summary of our Q&A answers with the materials that'll come out later. So thanks, everybody.
Excellent. Thank you all. We appreciate you being here with us. Real quickly, for those who are on the line and have been joining us for our CARES Act webinars to date, we do have one coming up on December 10th. So you'll see that on our website under seminars. We'd love to see you then. We'll be sure to follow up with details, of course, via email as well. So enjoy the rest of your day. We appreciate y'all coming, and we'll stay tuned with more details as we get them.
Thanks.